Okay, so do you need to take a break or we can just keep going? I have one more thing to talk about. I do not plan to use the full time for tonight's lecture. So I just have one more thing about cash flows. So like I mentioned, right, I'm planning to do one multiple choice questions on something similar to this question. Is that fair? If you think it's not fair, I will not do it. So just let me know. Is that fair?
I think it's fair, yeah.
Yeah, it's fair. Thank you. Okay. So I'm telling you, there's one question in the multiple choice question. You need to figure out what's the amount of the impairment recovery. Okay. I give you enough hints on this. Because usually students come to attend the last lecture, they are hoping to get something out of it, right? So that's my first first bonus for you to come, right? You have you know a 3-mark question now, okay? Do you need to take a break before we keep going, or you want to just go through this and then finish it?
I'm okay if you're okay.
Yeah, I'm okay. Okay, let's take a look on your textbook. Okay, we have a cash flow here. That's A27. A27. So this is in the Appendix A about statement of cash flows. Okay. So I want to talk about direct method. Direct method. You know, when you prepare the operating activity, right? Operating activity section on cash flows, you have 2 methods, right? You can use indirect method. This is the one you have learned in 2100, right? But for direct method, you haven't learned yet, okay? In the earlier semester, I posted a video about the cash flows. In that video, I touched on the direct method, okay? I think, it's good to know these 2 different methods, right? So today I want to talk a little bit about direct method. What do we mean by direct method, right? So under both methods, you're gonna get the same number, okay? You're gonna have the same number for operating activities, okay? But the rationales is a little bit different, okay? So here, under direct method, you consider cash and operating activities. You consider about customer. So for customers, you receive cash, right? Cash receipts from customers. Okay? And then you consider suppliers, right? You consider suppliers. Consider suppliers. So you have cash paid for the inventories you purchased. Okay? And you also consider your employees or other business partners, right? You have some other expenses. You have cash paid for operating expenses. So this is the 3 main things here. Cash you received from customer, and the cash you paid for inventory, cash you paid for operating expenses. Okay. what's your cash received on the customers? Okay, so basically it's a sales revenue, right? Suppose in your business, you only take cash, right? You don't take a credit card. You only take cash. You do not give people credit. You do not sell on account, right? There's no AR, right? So the cash you received should equals sales, right? But you will receive less cash because you give people credit on account. So you minus what? AR, right? Change in AR. Right? If your AR increased, you are going to receive less cash, right? Because you sell on account. That's why your AR increased. You're gonna receive less cash. Okay. The cash received from the customers is your sales revenue, total sales revenue, minus change in AR. Does this make sense?
Yes.
Okay, very good. Now let's take a look at the cash paid for inventory. Cash paid for inventory is what? Cash paid in inventory. So think about purchase. What purchase equals? You could pay cash, you use cash paid, right? For inventory. So if you don't give cash, what do you give? When you purchase something, if you don't give cash paid, what else will increase?
AP.
Thank you. That's a change in AP, right? Right. So if it's a positive number, your AP will change, right? Pay less cash, you're gonna have more AP, right? The total together is your purchase, right? So what's your purchase? Do you know what's your purchase? Think about the inventory equation. What's the purchase? Okay, your beginning inventory plus purchase, that's your cost of goods available for sale, correct? So you have an opening balance, and then you purchase more. So now together, that's the amount of inventory, the cost of goods sold you have for sale. Is that right?
Yes.
Okay, and this equals those goods sold all plus those goods unsold, right? You're gonna have cost of goods sold plus cost of goods unsold. What is that? What is the cost of goods unsold?
Your ending inventory.
Ending inventory. Okay, so now what's my purchase, right? What's my purchase? So I'm going to move this item to the right side of the equation. Okay, that I'm going to get my purchase, right? So purchase equals, okay, cost of goods sold plus ending inventory. This one, I'm going to move this to the right side. So that became a minus. So ending inventory minus beginning inventory, that's my change in inventory. Okay. So now consider this. What's my cash paid for inventory? That's going to be cost of goods sold plus change in inventory. And I need to move this item to this side, minus change in AP. Does this make sense? This is how much you paid for inventory. Cost of goods sold plus change in inventory minus change in AP. Are we okay with this?
Yep.
Okay. Now, what is the cash paid for operating expenses? Okay, so then you have operating expenses. Okay, plus if you prepaid, right? So it's more than the operating expenses for the current year, right? You paid more cash, right? You add prepaid expenses, change, right? Operating expenses plus change in prepaid. If you prepaid by cash, right? So the amount of cash you pay will be higher, right? So if you have prepaid, if all the operating expenses you paid in the current period with cash, that's good, right? That's the cash paid for operating expenses. But if it's prepaid, you paid advance for the future expenses, that's going to cost you more cash, right? That's the change in the prepaid expenses. So now you see the picture in A27. Now you understand what happened. Okay, you understand what happened. So I hope you are following me. But if you're not, you can just read this. Just read the textbook carefully. Okay. So now I want to know what's my net cash. Okay. So cash received, sales minus change in AR. Okay. Cash paid, you are going to minus, right? It's a negative cash flow, right? Cash paid is negative cash flow. You are going to minus this whole item, cost goods sold plus change in inventory minus change in AP. And the cash paid for operating expenses, you are going to minus operating expenses and plus change in prepaid expenses. So now I need to break the brackets. I'm going to break the bracket, sales minus change in AR, okay, minus cost goods sold, minus change in inventory, okay, minus and minus, I have a plus, change in AP, okay, and then I minus operating expenses and minus change in prepaid. Okay, so now I'm going to shuffle the position of this. I'm gonna put all these income statement items in the beginning. So sales minus cost of goods sold minus operating expenses. So this is all the income items. And then minus change AR minus change inventory minus change prepaid plus change in AP. Okay, so this is very interesting now. So for these items, can anyone tell me what is this? Sales minus cost of goods sold minus operating expenses. What is that?
Operating
That's your,
income.
that's your net income.
Net
EBIT?
income? Net
Correct.
income, right? Net income, I have to add depreciation, right?
Yeah.
I have to add a loss, right? I have to deduct gain, right? So this number is going to be my net income. If there's depreciation plus depreciation, there's loss, add loss, it is gain minus gain, right? So that's good. How about this part? Change in AR, change in inventory, change in prepaid. What are those? Minus, change in, what are those? Come on. What is AR, inventory, and prepaid expenses? What are
Current
those?
assets.
Current asset. Okay. And then you add change. What is your AP?
Current liabilities.
Current liability. Right? Now, is this familiar? Is this familiar to you? Is this familiar to you? Net income plus depreciation plus loss minus gain, and then minus change in asset plus change in liability. Is this familiar to you? What is this?
That's the indirect method.
Indirect method. Very good. This is your indirect method. Indirect method, you start with your net income, right? You start with your net income, and then you make adjustment on the non-cash items, right? Depreciation, loss, gain, right? And then you work on the change in the working capitals, right? The current asset, the current liability. That's exactly the indirect method. Now, did you see? This is the reason why the direct method and the indirect method, you should get the same number. You see, right? You see now why. Okay? Because otherwise you wonder, oh yeah, no, you start with cash from customers, cash paid for inventory, cash for operating expenses. You are doing this by this way, right? You are going to get exactly the same number as what you would under the indirect method. And you can see now, yes, right? Yes. Any question on this? When I was a student, you know, I was just told to do things certain way, right? Oh yeah, this is just the way to do it, right? If you do cash from customer, cash paid for inventory, cash paid operating expenses, if you follow this, you will get exactly the same number. But my question is why, right? And today I have shown you why. Okay, so I hope you have the confidence that both method works, right? Both method works. You're gonna get the same number for the operating activity, right? For the operating activities. Any other questions? Is this okay? So if you take a look at the page A26, they give us example for the operating section of the statements of cash flow. Okay, so they show us cash flow from operating activities. Okay, so first they talk about how much cash they received from the customers. Okay, and then how much they paid to the suppliers and employees, and how much they generate from the operating activities, right? That's the direct method. So do you have any questions on this?
No, all good.
Yeah, okay, good, thank you. Anyone else? So we didn't spend a lot of time on statements of cash flows, right? But I don't want you to walk away from this course without knowing what is the basic ideas of direct method, right? Okay, so so in the exam, okay, I will not test you anything like this direct method, just because you didn't get enough time to learn this. But I think it's worth of 20 minutes, 30 minutes of our time to get to at least understand what is direct method, what's the relationship between direct method, indirect method. Mathematically, it's equal, right? Why? So we know that we have the confidence. Um, so that's it. I didn't get too many questions from you guys. So yeah, so make sure you know the impairment reversal. Okay. So if you don't have any other questions, we are done today.
Thank you, Wei Ming.
You're welcome. Oh, by the way, I forgot. So this is our last lecture, right? So I may or may not see you in the future. Okay. So I may teach income tax. I don't know. Previously, I taught corporate tax. I really, really enjoy corporate tax. It's quite interesting. We had a lot of fun in our class. I also really enjoy 3101, the second intermediate financial accounting. But unfortunately, I will not teach it next semester. I will teach this course again. Okay. So yeah, well, good luck with your accounting courses, with your job hunting, right? You are looking for a co-op job, for full-time job. So I really wish all you the best. It's really my great pleasure to spend 3 months with you guys. I definitely hope that I could get you guys a little bit more, right? I still keep in touch with a lot of my students from Calgary, from Lethbridge, but it's so unfortunate. The nature of the online delivery really limits our interaction, and I don't see you even a lot from the camera, right? If in the future, if we run into each other, if I don't recognize you, please forgive me, okay? So usually I have very good sense of students' name. Even after 1 year or 2 years, I run students in a campus. I still remember their name, but I cannot guarantee it for this semester. So yeah, and all the best. Good luck with your final exam. So if you have any questions, let me know. Okay, send me email, or you need a meeting, just give me a call. Right? Some students call me, ask not just accounting questions. They have their own. They trust me. I really appreciate that. So people call me, asking me more kind of like not accounting related, career planning, all those type of other general questions. I really appreciate that. It just shows that they trust me, right? So yeah, if anything you think I can be useful, I can help you. Just send me email, and if you have questions, send me email. I'm open to chat with you over Zoom meeting or over phone. You know my phone number. It's on the course outline. And again, make sure you study hard, right? I think this is a very important course. You want to try your best, right? You want to try your best. Yeah, so I don't have anything else to offer, and yeah, so keep in touch. Yeah, thank you. Really appreciate it. Okay,
Thank you so much, Professor.
Thank
you're
you.
welcome. Yeah,
Thank you.
bye.
Thank you, Professor.
Yeah, thank you.
Yeah. Thank